Hello guys, in this video I just want to show you guys how you should be trading for every callouts that we make. So let's get into it. So yesterday was BHC. This is a 5-minute chart and we called out BHC 25.5 calls at 30 cents, $30 per contract, and this was called out at 10:18 a.m. So let's review the charts here. As you can see, the PPS signal, the buy signal kicked in, along with the candles um, above the EMA 13, supporting nicely right here, as well as the volume. This volume was way above the average. Look at this green candles right here. And this yellow line is the average volume, and it's way above. That means that this stock is breaking out. And so let's look at into PMC indicator as well, where this indicator shows you whether this particular stock is doing well compared to many other stocks out there. So when you look into it, so as you can see in this sky blue color, trending nicely with a yellow line, this really showing us that this stock is outperforming compared to other stocks, as well as MACD. And when you look at MACD, you really have to look at the gaps between the blue line and the white line. And look at this gap, nice gap right here. This means that there's a strong momentum. So that's why we called at 10:18 a.m. to enter the trade. As soon as we called, it spiked up to at least 18% profit, and but many of you could not sell the contracts because you guys were restricted to PDT rules. So around 10, 11, 11:10 a.m., 10 a.m., there was the stock start to lose steam and it start to pull back. As you can see, the yellow volume losing. The volume is obviously decreasing compared to the morning right here, and it's below the average, as well as the PMC indicator telling us that this stock is performing less compared to other stocks that are out there, along with the MACD crossing the lines and losing momentum with the arrows right here. And this is when we called out to buy BMC 25 puts at $41 per contract, and we just kept the contracts and we hold it because the stocks were just trending up, down, up, down. It didn't really make any big move. So we hold overnight, and today morning, there was a huge volume kicked in, along with the PPS signal and the EMA playing nicely below the green candles, as well as the PMC telling us that this stock is doing better compared to many other stocks out there, as well as the momentum. Look at this huge gap right here. This is a clear breakout sign right here, guys. So uh, I usually draw resistance lines for every trades that I do. So this is the first resistance line that I drew, as well as the second one, and immediately broke the first one, and then it went straight to the second line. And once it hit the second line, the second resistance, it started to lose volume again. Look at this. Look at this right here. Let's see. Start to lose volume, as well as the momentum is decreasing. This is the point area where you should really sell your contracts, both puts and calls. If you want to if you want to keep the puts because it's trending down, you could do that as well. But this is the time where you should really take your profit. We had at about 130% profit from the calls, just for the call itself as well. So this is what you should be doing for every single trades. Just 2 contracts for the starter as well as hedge contracts. Always protect your profits. If you guys, so that's it for this video. If you guys have any questions, just feel free to ask me.